Right now, there's a bearish divergence. Now, do you know what that is? If not, you want to make sure you do. We're going to explain it to you and what that means for your Bitcoin investment. Also, we're going to show you why you should never use only one indicator to try to predict price. And we're going to talk a little bit about that. So make sure you watch this video right to the end. And if you haven't done so, subscribe to the channel. Michael, let's talk about bearish divergence.
Okay, so let's define what a bearish divergence. You can see there's two lines. One is, this is on the 1 hour. So 1 hour RSI is going down, right? There's a pattern going down, and here is going up. So it started actually since today, early today, like 6 a.m. in the morning. Well, it started since, actually yesterday it started late. But anyway, when you see the price going up like this, an uptrend, but the indicator going down, it is an indication of a trend change. So, but this is not a long-term frame. So we're not looking at a 4-hour time frame, right? Like it's a 4-hour time frame is different, right? So you get a different result than you will get on the 1 hour. So it's only a bearish divergence on a 1 hour time frame. Now, it just could mean that it goes down more, right? And then bounce down on the support. So, and then it goes below the 1 hour RSI, below 30, sorry, on the RSI, which means oversold for that time frame. So that would not be a bad thing, in my opinion. In bull trends, you usually will go down on a 1 hour RSI first before you go down to 4 hours. So to me, that would be a good buy, like at the support. So I would use the indicator and the support to buy at 45, 421, right? That's how I would look at it. So yes, it is a good buy, and I would definitely buy more at this price. But we do have to pay attention to this red line, because that is the bull support band, and we definitely do not want to go below that. If that was to happen, which I don't think it will, then in that case, it's very bearish if we go below those bull support band here, as you can see, right? So we want to stay above these line here, right? That's like, we don't want to see that. That's very bearish. Okay, but I don't think that's going to happen again, because I think that what we're seeing onto the markets, traditional markets, is still pretty bullish. So if you wanted to look at, like it might have a bit of a pullback, but it's looked very bullish compared to, now I do want to say though that I am concerned of, how I can say it the right way, right? If the markets are giving us a dead cat's bounce or something like that, and it's a bear trap, then we need to be ready for that. So that's why you have cash positive during times like this, like just in case, right? So there's still risk. So, but in my experience, there's always risk. If you don't buy, you don't play, you don't gain, right? It's as simple as that. So exactly. Yes, I understand it could be a bull trap, but to me, it doesn't look like that. It just does not look like a bull trap. But some people are calling it a bull trap, and I don't think that's a confirmed, but it doesn't mean there's no risk. So that's why cash positive still, like sell some if you want to feel more comfortable. Make sure you have cash available, but I'm not selling anything because I'm already cash like positive. So everything I bought, I'm just like going to keep it. Patience, right? Patience is the key. Wasn't that the quote there? Money's transferred from the impatient to the patient.
Yeah, Warren Buffett said that. That the market is always transferring money.
Warren Buffett has said that. I thought I was the one who said that. Okay.
I think you quoted Warren Buffett saying that.
Oh yeah, that's what it was. I thought it was my quote.
So you could have Warren Buffett's quote.
That makes
Michael
sense.
Bullock, then Warren Buffett. So
I get confused between Warren Buffett and myself.
So on the channel here, we try to not only show you what's going on, but also to educate you so that you can become a better trader. And we talk a lot about analysis and tools you can use and indicators. And one indicator we've talked a lot about is the RSI, and when it shows good times to buy. Yeah. But you can't just take the RSI and use that as your one tool to make trading decisions. You want to explain it a little bit more why that is, Michael?
Yeah, you want to use the indicator plus support lines. Like this is a strong support line. We can see that because we have support here. We have support there. Well, what was resistant become like support, right? So it resisted here, but the top part becomes like support now for the line. So we have many support. So in case like now we're on the Stoch RSI, we can see that it is on the bottom, right? So it's a good place to buy, but I would not use just Stoch RSI to buy. I would wait for it to go down, right? Then I would buy at the support line. So I'm looking for at least 2 or 3 indicators why it's a good buy. So in this case, we have, if it continues down on the 1 hour RSI, right? It would go below 30. Stoch RSI is below, which is good. And you have a support and you're above the bull market support band. So, which I think is important to make this move, because if it's below the bull market support band, then the 1 hour is more risky. It means the 1 hour RSI not as powerful, right? Because you don't have enough bullish momentum. But now that we have bullish momentum, a lot of money is available. I think that's a fairly good trade to make. And I still would not use leverage because we don't confirm the bounce on the bull market support band. Now, should I explain that? I should, right?
Yeah,
Okay.
go ahead.
Yeah, let me explain that. So we want to see, like, how do we know for sure we're in a bull market? Let's go to the 1 week. Okay. What we would like to see is a bounce on these bull market support band, right? So right now, let's just take all that out. Right now, we don't have the bounce, confirmed bounce, right? So what we need to do is like a bounce like that, right? And these lines are going up like that, right? Like that. So if we have a bounce like that, then for sure it's bull confirmed, right? But sometimes what happens is that you get a fake out and then it breaks it down again. But that's rare. Most likely the pattern, and I don't have a specific percentage for you, but in most cases, and we could explore that, in most cases, the pattern is that if we've been under for like 4 months is what we've been here, and it breaks through, that's very bullish in my opinion, right? And I've been talking about that forever. So this is nothing new, but it's something to remind everybody that it is turned very bullish at this stage, right?
Yeah. And the more you understand these things that we're teaching you, the better trader that you're going to be. Because again, no one has a crystal ball to predict the future, but you can eliminate a lot of the risk by educating yourself. And, when it comes to those indicators and tools, think of them a little bit like witnesses in a courtroom. When there's only one witness, it's kind of like, you're going to put somebody away for life. But when there's 2 witnesses, 3 witnesses, it starts to build the case. And that's what the indicators do. They build the case for you of whether you should buy, whether you should hold, whether you should sell. So anyways, like always, this is not financial advice. You got to do your own due diligence.
But let's just take a look so that people can understand what I'm saying, right? Like most part, like here's an example, right? Where we are, let's see, we are breaking above, right? And bouncing. So, okay. So that's bullish until we break below. So, yeah, so that would be like one case. If we go back, that there is some, let's get rid of this here again. And so in this case is an example where we did not hold it, right? Like we broke above, but it broke back down. But that was a black swan event because this was the COVID time. And then later on after COVID, we pumped like crazy. So I think is, not a confirmed pattern. Like for most part, when we break above, it's bullish. Here's another example here, right? So that was the bear market there, bull market change, right? So the beginning of the bull market would be that we catch the bottom after a bear market. And this is a very different bear market now, because like that's where we're trying to catch it, right? Like just so people understand. So you had a big pump, right? And then you have a bear market. And where we're trying to catch Bitcoin is that's where we want to catch it. And it's possible that we've already caught that. And I know it's not so clear, but let me kind of paint the picture here. You're trying to catch the lowest point, which would be here. And that, that was the peak, right? So yeah, So the bear market started here, but that would be the lowest point could have been here. Now, this is a weird bear market because the lowest point is there. And now we're already starting to pump again. Right. And gosh, how do I explain this? This is so confusing in the market, but the PI cycle top shows the cycle top, right? The end of at the peak of the cycle top, you have a bear market. And this was our bear trap here, right? We had our bear trap, which was a higher high, but this is why it's confusing. Okay. I don't know how much I should explain, but I will do my best. So we're trying to find, right, like the peak should have been here, but it was not. We had a higher high, but it was a bear trap because look at what happened after, right? We got wrecked. Everybody who thought it was not the end got wrecked with a 52% down, right? So yeah, and now we're going back above. So the reason I would say is that it's the end is only because of the time. That's it. From the time to where we are now is about 350 days. And the last bear market lasted about, let me zoom in a little bit, lasted about a year as well. So that was the bear market, 371. So a bit longer. Yeah. And then what you got is you reach your lowest point. Yes. Like that's where you're trying to buy it. Remember what I was saying? You're trying to buy it here. Yeah. And then you just hold because it never goes back to there. Well, you may want to sell before, but you're basically never going to go back lower than this price. That's your lowest price. Like it never went back to 2802. Even during the Black Swan event, it went to 4,000, right? 3,009 or what might you. So all I'm saying is that could be the end. So if that's the end, let's say, right, then yeah, then the lowest point would have been here. That's crazy, right? So, but I don't know that. I cannot confirm or deny either. So what do you do when you can't confirm or deny? Because is it the end or the beginning of the bull market, the bull run after we've already reached the lowest point? I don't know.
Yeah,
because it's a weird one. It doesn't, of all the bear markets that Bitcoin has seen, is never followed this like pattern. Nobody talks about that. Maybe the next time we go on the live, I will explain the previous bear and exactly the pattern it like follows: a descending triangle and then crash from the like bottom. You reach the bottom and then the bull market starts. But what has happened this time, I think, is a lot of people buying Bitcoin at the like bottom. It's just new money coming into the like market that was never there before. Institutions are buying, countries are like buying. A lot of more people are not selling their Bitcoin. So that's why we didn't see the normal bear market, right? So
yeah, it's always fascinating, which again, we talk about this, you got to manage your risk, and partly depends on your strategy as a trader, whether it's long-term, short-term, day trader, that's all going to affect your decisions. So yeah. Anyways, that's all we have for you today. And like always, happy trading from the crypto guys.
All right. See you in the next one.
See you tomorrow.